On the show this morning, we'll take you through Naira's volatile journey from pessimism to cautious optimism. If there is something that can be got now, Bitcoin hits record high amid regulatory challenges. That's about above $72,000. And the African brands see 20% decline. We want to find out why is it that they are not hitting the eyes once projected. This is Business Edge. I am Lekon Onobanjo. We start actually by serving you with the top headlines across the continent. Senator Abubakar Kyari, the Minister of Agriculture and Food Security, announced that the federal government has finalized a €995 million agreement with the Brazilian government and the German Deutsche Bank Group to fund a green imperative program in Nigeria. Kyari made this declaration in Minna, Niger State on Monday. The program's objective is to establish mechanization hubs in each of Nigeria's 774 local government areas as part of its implementation strategy. A memorandum of understanding was signed between the federal government and the John Deere Group, a subsidiary of Tata Equipment, to deliver 10,000 units of tractors and implements over the next 5 years. South African gold producer Aurus has revealed its intention to make a public offering and be listed on the Nasdaq index through a business combination with US-based Regal Resource Acquisition Corporation with a valuation of R6.76 billion. Aurus, which operates the Blyvoor gold mine and outer tailings retreatment project in Gauteng, anticipates the completion of the transaction in the latter part of this year, marking one of the significant gold industry deals in South Africa in a long time. The company has been generating revenue from the Blyvoor gold mine and the tailings retreatment project. The transaction is expected to enable Blyvoor's expansion and operational optimization, leading to market growth. Upon completion, Aurus's existing management team will continue to lead the business, subject to various regulatory approvals. Finally, Standard Chartered Bank Kenya has boosted its dividend payout by 31.8% to 29 Kenyan shillings per share, following a 15% increase in net profit for the financial year ending December 2023 to 13.8 billion Kenyan shillings. In December, the bank disbursed 6 Kenyan shillings per share interim dividend and has now raised the final payout to 23 Kenyan shillings per share from 16 Kenyan shillings paid the previous year. The heightened dividend distribution coincides with the period of net profit growth to 13.8 billion Kenyan shillings from 12.1 billion Kenyan shillings in the preceding year. The total dividend payout stands at 10.96 billion Kenyan shillings, representing 79.4% of the net profit, in contrast to the 8.31 billion Kenyan shillings distributed based on the 2022 net earnings. Stanchart also achieved a 32% surge in net interest income to 29.3 billion Kenyan shillings due to increased lending. In January 2024, the Naira was believed to be on a one-way plunge towards 3,000 Naira to a dollar. Even the more ardent believers in free market economics had serious doubts about the Naira and how it could be salvaged, if it could even be salvaged. Now, some even suggested scrapping the currency or changing its name as they thought it was beyond redemption. However, economic analysts are of the view that the Naira is bottoming out, that it has less downside risk than upside potential, and they suggest that the Naira will trade in the parallel market at about 1,500 Naira to a dollar to about 1,650 Naira to a dollar range through the months of March and April before a gradual and slow recovery. Now, this means extended pain for Nigerian importers, manufacturers, and more specifically, consumers. This morning, Victor Ali, Senior Vice President and Head Investments, Sankore Global Investments, joins us on the show this morning to help us unravel this. Thank you so much, Victor Ali, for joining us.
Thanks for having me.
So the Naira is said to have been misaligned from its fair value of an extended period. And in 2024 alone, it lost over 36%, plunging to about 1,210 Naira to about 1,915 Naira to a dollar in the parallel market anyway. But Some financial gurus said that the Naira just about assumed its actual value as it was previously overvalued. How do you see this postulation?
Yeah, I mean, I think the Naira has, suffered quite some over the last almost 9 months, if you will, particularly since, the administration through the central bank decided to, remove all of the bottlenecks that we had in the markets where you had, rates at different kinds of markets, really, and essentially just converge all of those, right? Somewhat float the currency, if you will. So since then, the Naira has, suffered some significant depreciation. But it is important to point out that, that depreciation that we have seen in the Naira has been driven by, a lot of factors that are not necessarily fundamental to our economy. I mean, if you look at the Kenyan shilling, for instance, if you look at the comparable period, it's down just about 8%. If you look at the Ghanaian CD, is down just about 10%. If you look at the Turkish lira, within that period is down about 14%. It's important to point out that these countries essentially have the same macroeconomic issues that we're dealing with, price stability challenges, fiscal deficit issues. So, and if you look at the Naira, it's down about 60% within the same period. We did not have an earthquake in Nigeria. Nigeria as a country did not cease to exist. So, it's difficult to really justify the sort of free fall that we have seen in the Naira. Like I said earlier, it's been down really to a number of, factors that are not necessarily fundamental. And only recently, we've started to see moves that we believe would, basically ensure that the Naira regains some value, in the market, really. And the truth of the matter is that before now, the Naira had really been undervalued, and we're seeing things begin to pull to where the value of the currency should actually be.
We'll look at some of the factors. Now, we see that the Naira had been on a free fall since 2019 due to, number one, low forex liquidity, loss of confidence as a store of value, increased Naira speculation and fear. We'll talk about restrictions and exchange rate control, negative real interest rates, and some other factors like that. But then this is where I'd like to have you answer or come in. Why were all these so pronounced, resulting in accelerated decline for the Naira between 2019 and 2024? Because before 2019, we had seen a gradual decline, but it wasn't this monumental. Now, looking at all these factors that I mentioned, why is it that these factors propelled the downward spiral of the currency between 2019 and 2024?
Well, I mein, before COVID, really, the Naira was essentially stable, right? We had a bit of a currency challenge, really, between 2016 and 2017. And with some innovations, the INO, the raising of Eurobonds, were able to stem that tide. And really, the Naira remained stable from then up until just right after COVID. And the truth of the matter is that the impact of COVID essentially reverberated the world over. Oil prices collapsed in the aftermath of that. It impacted receipts and all of that. And the posture that the Apex Bank had maintained was one where it basically wanted to protect the value of the Naira. Now, to do that, you obviously need ammunition. You need the resources to do that. Unfortunately, the Apex Bank didn't have that, right? So when the new administration came in, it just thought that it was wise to really allow the true value of the Naira be reflected and save those resources that you've basically been using to, if you will, defend the Naira to almost no avail, channel it into other areas. So the situation became significantly exacerbated really because of the policy posture that the previous administration at the helm of the central bank had taken. So that really aggravated the situation. And that's why we're where we are today. And a lot of the moves that we're seeing today seem to be very, very strong because a lot of things that were meant to have happened before now, in terms of a policy move, didn't quite happen.
Okay, so let's now look at the policy posture of the Apex Bank under the current administration through the Monetary Policy Committee. Now, according to what we know, ever since the MPC meeting last month and coupled with other drastic measures like going after BDCs and Binance, we discovered that the Naira appreciated by over 18% to its current level of about 1,610 naira to a dollar. But then some people think the approach of government was too harsh and even wrong, including the MPC increasing interest rates by about 400 basis points to 22.75% from 18.75%. So you've talked about the policy trajectory of the previous administration, and we now begin to scrutinize how this current administration has driven its own policy to rein in the depreciation of the value of the Naira. What do you think about their policy stance? Do you think it was too harsh also?
No, it wasn't too harsh. It was the right thing to do. The truth of the matter is that when you have debilitating economic situations, particularly if you're dealing with price stability issues, you really don't have a choice as an emerging market. You have to make your interest rate attractive. You have to keep your interest rates at least positive in real terms, right? We've had inflation that's almost 30% for a while, and you've had our benchmark rates less than 20. You've had rates on, government securities at about 15 thereabouts. You were essentially carrying negative real interest rates on those instruments. Those were not attractive. You cannot get investors to be attracted to those sort of funds. You also cannot even get the much needed foreign flows to come in and stem the tide of the currency challenge or the price stability issue that we're dealing with. All of the countries that I've mentioned earlier have had to hike their interest rates quite significantly. I mean, Turkey has interest rates at over 40%. Ghana has had interest rates very, very high as well. So if you're dealing with price stability issues, the move to make is to increase interest rates and make your interest rates very positive in terms of a real stance. Now, there's obviously the complaint around what it does to the real economy. The truth of the matter is that the economy and even businesses cannot grow when you are grappling with significant price challenge issues, right? Businesses were already suffering anyway with all of the FX issues, with all of the inflation. So the point is this: let that price stability challenge be taken care of, and then we can focus on growth. Really, in the absence of price stability, you really cannot. That is the point.
So how well are we going to attain that stability? Because we see that the Naira, since the different measures have been put forward by the Apex Bank, it has not gone below 1,610 Naira. And it is said that the Apex Bank is finally at its wit's end, speculating that the currency might begin to have another round of depreciation. I don't know how true that is. Now, are there measures by which we can sustain the momentum as of now? What do you think can actually be done to stop the constant hemorrhaging of the Naira?
Well, I think that the Apex Bank is on the right track, really, right? It's not a silver bullet. It's not going to happen in one fell swoop, right? With the policies that we've seen, you're not going to see a very drastic decline or a drastic appreciation, in the Naira. It's going to take some time. There is a cadence to these things. There's another MPC meeting coming up this month. I believe that the committee, that's the Monetary Policy Committee of the Central Bank, will stay the course to ensure that, this price stability issue really is taken care of. I mean, you need to recall that over the last 9 months, if you will, nothing have been done to address this issue, right? So all of the moves that we're seeing are essentially moves to kind of front load things that should have been done before now to ensure that we stay on the right track and on the right trajectory. And I believe very much so that the Apex Bank is doing the right thing. This is a necessary thing that needs to be done to try and tame that price stability issue that we has basically, been a debilitating problem for the economy over the last 1 year thereabout.
Okay, let's quickly look at some of the solutions that have been proffered by economists. Now, they have pointed out that there's a need for productivity improvement. They've talked about the need for transparent FX market, consistent macroeconomic policies, and foreign exchange interventions. How well can all these be processed to help the Naira gain value?
The truth of the matter is that in dealing with these price stability issues, there is the monetary side of it, there is the fiscal side of it. Now, the fiscal side, it's going to take some time, right? Talking about, increasing productivity, we need to build the infrastructure. We don't have that. We need to build roads. There's a lot of things that need to be done. That's going to take quite a while to do. Whilst we're still grappling with how that gets done, monetary policy can step in and assuage, all of the issues that we're facing. Whilst fiscal policy, goes to work, fiscal policy certainly will take some time. That is the truth of, the matter. Whilst we wait for fiscal policy to truly kick in and, take its course, monetary policy would have to do what it needs to do. And like I said earlier, from a monetary policy standpoint, you sort of have to tighten interest rates to rein in inflation and also stabilize the FX situation that we've been dealing with. That's the move to make from a monetary policy standpoint. On the fiscal side, a lot needs to be done. It's a whole coordination throughout the economy to ensure that there's better security, to ensure that there's better infrastructure, and all of these things. Really, these are the things that will put us on the right track. I believe sustainably.
Okay, so whether or not we go we approach it via monetary policies or fiscal policies, there seems to be a bit of confusion, and this is it. Now, the IMF projected that the naira's value would end in 2024 at about 2,081 naira to a dollar. That's about 35% depreciation. Now, the EIU insisted or said that they are projecting about 2,000 naira to a dollar. Now, the Nigerian government, in its 2024 budget assumption, sets the exchange rate at about 800 naira to a dollar. Excuse me. While the financial derivatives company believes that the exchange rate of the naira will stabilize at about 1,580 naira to a dollar in 2024. So when we look at all these different postulations and stands, what do you think the projection should be in terms of its true state? Because if we have policy directions, we have measures that we're trying to put in place to address all these issues, but then we cannot have a concrete figure in terms of projection. At the end of the day, the results might be erroneous. So which do you think is true in terms of realistic projection?
Like you said, these are postulations. It really is anybody's guess. You can't say because the EIU has said something that is at variance with what the central bank is saying, or because they have said something that is at variance with what the IMF is saying, that there's confusion there. That's really not a confusion. There's no confusion there. You would agree with me that if you look at economic variables, typically institutions always have their own marks, their own postulations as to where they believe things would basically set at. So I don't think that's confusing in any way, shape, or even form. At the end of the day, I believe that with the policy moves that we have seen so far, and the imports that the Apex Bank will continue on this trajectory, I think that the naira will continue to appreciate from here on out. Really, where it settles really is anybody's guess. It's very difficult for you to come out and say, oh, this is where we think and believe the naira should stay or settle. That's very tough. But I think that with the policy moves that we have seen, if the central bank stays the course, maintains the trajectory, I think that we'll see the naira continue to appreciate from here on out.
Okay, Victor Aluyis, Vice President and Head Investments and Korea Global Investments, thank you so much for your time.
Thanks for having me.
Our next talk will be about Bitcoin that has hit above the $72,000 threshold. What are the factors driving this growth? We'll find out in a bit. Due to significant investments from well-known U.S. financial institutions and U.S. authorities' approval of spot Bitcoin exchange-traded funds, the crypto coin reached a new high with full force as the asset broke above $71,000 and tapped at almost $72,000. Now, the current spike in the value of Bitcoin can be attributed to the entrance of institutional investors and the availability of financial products tied to its value. However, experts advise caution owing to its inherent volatility. Uncertainty is increased by the planned halving occurrence in April, and simultaneously Binance, a prominent international cryptocurrency exchange, terminated its Nigerian Naira services due to regulatory disagreements with the Nigerian government. Now, charges of manipulating the foreign exchange market and moving funds illegally highlights the continuous difficulties in the regulatory environment surrounding cryptocurrency. So this morning, to help us give it a better perspective, Tayo Omidiran, Head of Operations, CoinCoin Exchange, joins me. Thank you so much for joining us.
Hi, morning. How's it going?
Pretty good. So for the benefit of our audience and a bit of education, what are Bitcoin exchange traded funds?
Okay, so good morning, everyone. Bitcoin ETFs, which is exchange traded funds, are a type of investment funds that the value of Bitcoins, and they are exchanged on traditional markets, like similar to stocks. So that's what Bitcoin ETFs are.
Okay, so we see that this cryptocurrency was launched in 2009. So, in what ways does the surge in Bitcoin's value impact the broader investment landscape in the cryptocurrency sector from time of inception up to this point?
Okay, so it's obvious that cryptocurrency is the future in terms of finance and payments. This just shows that there's generated interest and it's gathering more attention. I mean, if you look all over the world, most SEC securities and exchange are discussing how to regulate and create policies for Bitcoin. So this just shows that there are a lot of interest and attraction towards Bitcoin and other cryptocurrencies. So exciting times for people in the cryptocurrency.
Okay. So then, according to company's market cap, we see that Bitcoin has now surpassed silver, which is the second biggest commodity in value. Bitcoin is now the 8th largest financial asset, beating silver and Facebook's Meta in the financial asset top 10 list. But then a lot of people are still skeptical or, very cautious. Can this last, or could that be a bust, as it was reported earlier about Bitcoin?
Okay, so just like any investment, you have to properly educate yourself, get all the necessary information. But with Bitcoin, it's what is currently happening is called the bull run and market bull. This time, we believe Bitcoin can reach $100,000 towards the end of the year and be sustained. Because, like I said, the interest and appeal of cryptocurrency is at the highest it's ever been in the world. So gradually, we feel once it hits about 100,000, it should have a slight dip, be sustained at that rate. But before going in, get detailed information about cryptocurrencies. Maybe diversify your portfolio so you limit your risk while maximizing your profits. But like I said, interesting times for cryptocurrency, and this bull run should be sustained for at least the next 3 to 4 months.
And that means that we see a bit of investor confidence and interest in this particular crypto resource. But even in all that, experts are saying that there's a need for caution. You've talked about the need to diversify portfolio. There's a possibility of volatility, but then a couple of people are still concerned if that will be enough to insulate investors from, if there's a particular fall at a particular time, if there's a dip at a particular time, whether or not you divest, whether or not you are cautious or you gather enough information, would that be enough to insulate investors and their funds from, a negative repercussion?
Like I said, it's similar to stocks, trading stocks. That's what Bitcoin ETFs are. There's no certainty that there won't be dips. It's hard to averse risk without getting detailed information. But we, on our platform CoinCoin, we have systems in place which help in you picking the right cryptocurrencies you can purchase. But overall, anyone going into the crypto space has to make detailed research and pick the right cryptocurrency to invest in. And just diversify and start small, and hopefully, you make profits rather than lose. So that's
okay. Tayo, just stay with us. We'll go on a short break and return and see how we can scale this home and see how Nigerians can benefit or trade without having to lose their finance, lose their resource, and not be engaged in any form of infraction. Just stay with us. You're still watching Business Edge. We'll be back in a bit. You're watching Business Edge, and we have been talking about the Bitcoin that has been hitting highs, and everybody is talking about it right now. And we're looking at all the pros and cons and how investors are smiling to the bank right now. We've been talking to Tayo Omidiran as regards this. So Tayo, as I said earlier, is about we scale it back home because we know that a lot of people are talking about Bitcoin now because of how it is appreciating. Other cryptocurrency platforms are trying to tag along. We see that according to data, organic interest among Nigerians for the trade and transactions are set to be mounting on all these platforms. But in the country, rules are stringent. So how can Nigerians continue to trade on such platforms without breaking the law?
That's an interesting one. Yes, so with Binance leaving the scene, there's a vacuum left for indigenous exchange platforms to replace and do a better job under strict policies and guidelines. Currently, obviously Nigerians will always find a loophole, and there are still some trades going on, mostly on Telegram. But I don't advise, like we mentioned, this is a high risk investment venture. So currently, I know Nigerians are trading on various platforms like on Telegram, but some exchange platforms that are properly regulated and have all the licenses like CoinCoin still offer cryptocurrency just as an exchange but not trading. So if you still want to invest in Bitcoin, you can download CoinCoin app, and with your Naira card, you have access to Bitcoin. All this is legal, but we don't offer trading services right now, just exchange. And there are a few other platforms like that. Yeah.
So I'm talking about other platforms. We know there is a Bitcoin, and there's also the Naira, which is a local equivalent. And of course, Naira was launched in October 2021. And as of May 2023, reports by the IMF indicated approximately 14,000 Naira weekly transactions, representing only 1.5% of the total wallets. And this implies that 98.5% of wallets go unused weekly, indicating disappointingly low adoption. So why is it that the Naira is struggling to gain relevance and wider adoption in the country?
The Naira was the CBN, federal government of Nigeria's attempt at the crypto market. It wasn't adopted because fiat is it's a bit more complicated. So what the federal government have said is rather they are going to come out with CNGN, which is a stable coin, which should be better adopted because USDT, I'm sure you're aware of USDT, which is what was most attractive about Binance. If Nigeria, the CBN, managed to roll out the CNGN, that should be better adopted by Nigeria crypto users all over the world because it should be more stable. Okay. But the Naira wasn't totally well thought out. I mean, I think the CNGN, which they've said they would release, it should be a better option because that's a stable coin. So you can trade CNGN to USDT 1-to-1 rather than Naira. Naira wasn't appealing at all. It wasn't well thought out.
Okay, well noted. Tayo Omidiran, Head of Operations, Coin Exchange, thank you so much for sharing your thoughts with us.
Pleasure. Thank you.
It's about time we bring you the next item on the line on the show. Do stay with us. We'll be back to it. Despite optimism in the progress of the African Continental Free Trade Area and other initiatives to drive African brands, the continent's brands regressed by about 20% from a 10-year high of 17% to a 14% share of the top 100 most admired brands in Africa. And this is according to the 13th Brand Africa list of the most admired brands in Africa based on a survey and rankings conducted by Geopol, Kantar, and Brand Leadership across 32 African countries that account for more than 85% of the continent's gross domestic product and population. So to help us understand this better, from Johannesburg, South Africa, I have Pat Mafangu, youth brand enthusiast. It's nice to have you around on the show.
Thank you so much for having me, and good afternoon, Africa.
So as at the time when a lot of people felt African businesses secured quite a number of investment funds, one would have thought that they would have scaled up their business operations, and they would have become, a brand or brands to talk about when you talk about other brands on the global space. But then we see a decline in these African brands. What are the factors you would say are responsible for this dip? Is it due to the love for all things foreign, or there is a mark that African brands are not meeting?
Yeah, I mean, at the core of branding or building strong African brands really is trust, right? And given the times that we find ourselves in terms of the economy, a lot of consumers default back to what they already know. You must remember that branding is a function, or building a strong brand is a function of time. So the longer your brand has been around, has been your consumers have been exposed to your brand, the more likely they'll fall in love with it. But also, there's a big role that media, play when it comes to building a brand. So you must remember that a lot of Africans are exposed to foreign media, right? And you cannot aspire to that which you are not exposed to. So if you consume a lot of American, for example, content, a lot of European content, and they showcase their way of living, they showcase their brands, therefore you're more likely to warm up to those kinds of brands that you see on screen. What Africa has not been able to do very well is, from a media perspective, is the drive of exposing made in Africa brands.
Okay, so you've talked about trust, but then we may need to look at other areas. Talk about the standard or the quality of goods or services being made available for the potential consumer. There are also issues of copycats and those who are not staying true to their brand. There's also the issue of logistics and internalizing technology to scale up their operations. Now, why is it that African brands struggle with these various parameters? Why is it that they are not able to rise above these issues and make their brands, the type that other countries can embrace, that even Africans can be proud of and consume, and would want to also partner with them to scale up their businesses? Why?
Yeah, but remember, I mean, quality is subjective, right? Like I said earlier on in my response, when we're exposed to a lot of American, say for example, brands and products, you're more likely to associate products with quality. Also, if you look at made in China brands, for example, for the longest time, a lot of us thought that brands from China were of inferior quality. But if you drive around in Johannesburg, for example, you see a lot of Chinese cars on our roads than ever before. But what China has managed to do right is the fact that they were able to invest in their brand. They were able to also invest in research and development. So what we are lacking as Africans is also just belief in Africans, right? Meaning that whenever there's a young entrepreneur out there that's coming up with an idea, that idea can be backed up with a solid investment so that one day they can be of equal footing to their global counterparts. So investment is a big part, right? You cannot build a brand with just no money. So there's a lot of money that needs to be invested. Obviously, you need time and tenure to be able to, grasp the consumer's attention. And lastly, like I said, innovation becomes a key part. You also touched on the distribution, of these products in and around the continent. We do know that from a continent perspective, we do have a logistical challenge whereby products are not moving, freely from one country to another. That obviously poses a big challenge for entrepreneurs in Africa. So if you can sort of have an infrastructure, that is good enough, that's going to handle the demand. I mean, there's big talks of intra-Africa trade, for example, whereby Africa is encouraged to trade with itself. but most of its goals will not be achieved in the current setting, whereby I cannot freely, move my products into Nigeria, for example, from Johannesburg, South Africa. If I cannot move my products freely from Ethiopia to Rwanda, somewhere, so there needs to be that infrastructure from a distribution perspective that allows African products and goods and its people to move freely. You remember, once upon a time, for example, to access, even to this day, it still does happen, where you have to leave the continent to come back into the continent. You're traveling from South Africa to, say, for example, Lagos, Nigeria. So those are some of the things that really will help in terms of driving the agenda of African brands forward. There needs to be political will, as we know with everything. Really, it starts there. The policies that favor local brands, and which again, what China did very well when they were in the process of industrializing their countries, whereby they gave a fair chance, for local brands to play before they allowed in their competitors. You look at a brand like Alibaba, for example, which is a behemoth when it comes to the e-commerce space. They were given a chance, and they blocked out external competition to allow for local brands to become competitive.
Okay, well, it's been said that all hope is not lost anyway, because when you look at the Nigerian and South African brands, they are set to be making waves. Now, let's quickly look at the financial and services sector. We talk about brands like the GT Bank, Standard Bank, Dangote, DSTV, and the likes that are set to still be making waves and being resilient in the face of challenges. Now, if you're going to be critical about their assessment, what are these ones or these companies doing to retain patronage across the continent?
I mean, again, time. I mean, if you look at the brands that you just mentioned now, for example, even MTN, which has been around for 30 years plus, so time has a big factor, I mean, if you look at Standard Bank, for example, which also has been around for, I think, over a century now, so those brands, I mean, have fully entrenched themselves in the market that which they operate in. So they also, what they do is they run campaigns, they buy media, they advertise, they are seen, they offer products that are also relevant, that are in demand, that are in need to African audiences. So all those factors coming together do lead to those brands, standing the test of time. For example, you mentioned Dangote, which trades in cement and in sugar and all these other products. Those are products that people, if you think about it, need on a daily basis. So they're able to entrench themselves in the consumers' lives.
Okay, so that's about it. Pat Mathangu, youth brand enthusiast. I want to say thank you so much for talking to us at this time. I guess this is one topic that we get to revisit, most especially as we also would have to look at what other brands that are coming up would need to do in order to meet up with these top brands are doing to have, parity and have a strong market base for the African continent. But then we appreciate your contribution. Thank you.
Thank you.
And that's it on today's edition of Business Edge. Do not forget that you can visit our social media platforms at News Central TV. You can also head on to our websites, www.newscentral.africa, and call it download our mobile app on App Store and Play Store. We'll be back tomorrow, 11 a.m. West African time, as we continue to look at other business-related issues as it affects the continent. I am Lekon Obanjo. Enjoy your day.